Julian Liniger. He's the CEO of the Bitcoin-only startup Relai, and he's founded 3 companies in the crypto space. He's 30 years young, and today we will do a long-form conversation about Bitcoin, what are the risks of Bitcoin, why does he operate a Bitcoin-only startup, and much, much more. We just will keep going as long as it's interesting. As always, feel free to write questions, comments in the live chat. And yeah, Julian, welcome to the show.
Hi, Remo. Thank you very, very much for having me. Looking forward to this.
Absolutely. Yeah, let's start. How many people own Bitcoin today?
Well, today, the rough estimate, I think, or the last kind of number that I have in mind is around 300 to 400 million all over the world. In Switzerland, it's like 15%. In places like Nigeria, for example, or certain South American countries, can be up to 30% already of the population that owns Bitcoin. So definitely it's not nothing. So it's not like that small of a niche that people might think. It's already a considerable amount of people worldwide that have that own Bitcoin. It depends like what country you're in. And yeah, I think this is definitely something that is here to stay. And if you look at the internet, like if you had asked this question to an internet entrepreneur 20 years ago, or let's say 25 years ago in the middle of the 90s, then you would have gotten the exact same response that, how many internet users are there. He would have probably said 300 million roundabout. We're actually 1998 right now if you compare the user numbers of the internet back in the 90s, mid 90s, to the Bitcoin users right now. That's what I find pretty interesting. It's yes, already a considerable amount of people own Bitcoin, but we're still very, very early.
How many people own Bitcoin in the developed nations? For example, I think I saw a tweet that 15% of the people in Switzerland already own Bitcoin. How much is it in Germany or the US, for example?
I would need to check and research this. Also, it's actually quite hard to find out the exact number because yes, there are Bitcoin wallets, but one person can own 100 Bitcoin wallets. And then there are some wallets that are owned by many people. For example, at exchanges, Coinbase, the biggest exchange in the US and one of the biggest in the world, has just crossed 100 million retail investor users or customers. So 100 million users kind of own Bitcoin through Coinbase, but they all of these Bitcoin are basically on one wallet or just a few wallets. So it's really hard to say. The stats are not entirely precise, but I would say yes. So Germany, I would say, is a bit behind Switzerland, but not much. So because I know Switzerland is 15%, probably I would say Germany is probably around 10%, and this goes probably for most more developed countries. I think the US is also between 10-15%, something like that. And then, as said before, emerging countries, many of them are way higher already, up to double that amount, so like 30%. This means that every third Nigerian today actually owns Bitcoin. And why? It's obviously because of necessity, right? We saw that a couple of months ago when they had crazy bank runs because they changed because the inflation was so high, so they had to change the banknotes, and people wanted to go exchange the old banknotes to the new ones, and there were not enough new ones, so people actually lost money in that process. So everything went crazy, and that's just shows you what can happen if you have a centralized financial system that doesn't work anymore correctly. And they find Bitcoin, which is a decentralized, neutral, digital global form of money that is open to everyone and that is not manipulated by some central authority. And obviously this solves a lot of problems for them. That's why the adoption rate in such emerging countries is usually way higher.
Yeah, absolutely. So yeah, you said out of necessity. So now we had this huge banking crisis in the US over the weekend. People are losing trust in banks, are starting to question, are my deposits really safe? Is fiat really safe? So I think we are at a really interesting point in time right now. And Bitcoin just crossed 26,000 again for the first time since June last year. So it seems that there is a shift towards Bitcoin, and that Bitcoin could be seen as a safe haven compared with everything else. So I think we are in a really interesting time. But the other question is also regarding the number of Bitcoin users, right? If we drill deeper, the question is, if you hold Bitcoin at Coinbase, do you really own Bitcoin?
Right.
Or do you just own a number in an Excel spreadsheet, right? So
Right.
I think we have to go layers deeper. And I don't know how many. I mean, yeah, there are numbers of active addresses with X amount of Bitcoins on them. So I think this could be a estimate of the real users that really own Bitcoin and self-custody. Because I think what we learned last year with BlockFi and all the others is that it could be dangerous to hold Bitcoin in a custodial way, right? So
Absolutely.
how do you think about companies like Coinbase, custody solutions, or some stock market based solutions where you don't really hold the Bitcoins? Do you think we need that? Do you think it's just a stepping stone towards the future, and in the future everyone will hold Bitcoins in self-custody? What are your views on custody versus non-custody?
I think there's definitely space for pretty much everything. There won't be a future where everyone in the world is just going to do one thing and not the other thing. So there will be banks in the future. There will be exchanges, custodial exchanges in the future, and obviously there will be non-custodial wallets in the future. And it's going to be a mix because it makes sense to have banks, for example, that are very regulated and that have hundreds of years of experience and specialized in custodials to take custody of assets, for example, for institutionals that have billions of dollars, like or for high net worth individuals that have millions, tens of millions. Most of them don't really want to safeguard these millions in, for example, Bitcoin on their ledger or hardware wallet. And because a lot of things can happen, and then there's the questions of taxation. There's the question of like succession planning, and all of that kind of things. What happens when you die with the Bitcoin and everything? So these are the things that like how to safeguard assets and how to manage assets. This is what banks have specialized in the last couple of hundred years. So it makes sense for them to kind of upgrade to the Bitcoin financial system and improve their services in that regard, because they will still have customers. Also, exchanges are not really for holding your money, but for trading. So if you want to trade any fiat currencies to Bitcoin, for example, you need to have an exchange. You need to have an order book that basically consolidates all the buy orders, all the sell orders, and matches them so that they can create a price. And at least to date, there's no real like decentralized exchange, kind of non-custodial solutions for that. So this needs to be custodial. So exchanges like Kraken, for example, or Coinbase, they have a service that makes sense because people want to trade, obviously, but they're not very well for taking custody of your assets. There, you'd probably rather want to go for a bank if you have high amounts, and you certainly always want to have some amount your own. On your own, self-custody, depending on how much you are comfortable with. You want to actually own your financial future, right? You want to own your money. And this is possible in a digital way now with Bitcoin that hasn't been possible for a very long time. It's important just that people understand that they are at a risk whenever they have a counterparty risk, be it an exchange like FTX that shows you a certain amount of Bitcoin. It sells you a certain amount of Bitcoin and shows it to you on a display, but not actually owns the Bitcoin. to send it to you. And also banks like Silicon Valley Bank that now just collapsed because they didn't really have the liquid assets to meet the demands for, like, they can't really wire all the money. In the end, what people see on their deposits on the fractional banking system, like at a bank, they see 1 million in deposit or whatever, but only like 3% of that is actually liquid money. All the other, like, all the rest is just a number. So if more than 3% in the world goes and tries to withdraw their money in banking, it doesn't work. The money is just not there. And so you always, as people, always need to be aware that if they choose a custodian, they have a counterparty risk, be it a bank, be it an exchange. So in the end, you should always have at least a certain amount in Bitcoin and non-custodial. And then there's always the argument of, a custodial is fine as long as it's regulated, like regulation helps and everything. Well, to a certain degree, but FTX was a highly regulated company. SVB, so Silicon Valley Bank, was a highly regulated company. They were around since the 80s. So for almost 50 years, they have been a regulated bank. They have been huge. They have been one of the top 20 banks, largest banks in the US. You can be very large, you can be regulated, and still banks can fail. So for me, the only real store of value you can actually own yourself and you can sleep comfortable with is Bitcoin. I might be biased though.
Absolutely. Unless you bought at 70,000 and now we're at 26,000, right? I mean, it's always it's always a matter of perspective. But I think what this all shows for me is that so much knowledge is still needed, and how early we really are, because people think that when they have a Coinbase account that they really own their Bitcoins or that they are safe and that they don't have any counterparty risk. I don't think that the 100 million Coinbase customers, that they are really aware of what the deal is. And I'm not saying that this is bad, but you should be aware of it, and you should do your own risk management. And I think probably the best way to go about it is to just diversify. If you use centralized exchanges, then better have 3 and not just rely on one. If you want to have some money stored there. Or if you have a hardware wallet, better have 3 different solutions, or use a multi-sig wallet and then another hardware wallet or whatever. But just don't put all your eggs in one basket. I think last year really showed that this is a bad strategy. And I also think that what happened with FTX, for example, was a huge gift for the crypto and especially Bitcoin economy, because it showed us that we really need to go back to the roots and really need to understand what Bitcoin was created for, right? That it's, Nick Szabo had this famous blog post where he says that trusted third parties are security holes. So you shouldn't, in the Bitcoin system, in Bitcoin, you don't have to trust anybody. You can verify with encryption and with cryptography, but you don't have to trust anybody. And I think this is just a bad state of the crypto economy, that we have built so many centralized institutions, and now we are experiencing that they can fail. And I think we just, for me, it shows how early we really are. And you said it, probably there are 100 or 300 or whatever, just a tiny percentage of the world population has crypto or Bitcoin. And of those, I would argue less than 1% really understand what they own and have a strategy about it. So we are so early. And I think what for me, what's really interesting is that Bitcoin is a global phenomenon, right? It was created in a special time. It was created under special circumstances. It doesn't have a founding team. It doesn't have a central organization or anything. And it's really pure and it's really global. And I don't think that, for example, we in Switzerland here, we really understand the potential of it, because we have a roughly stable fiat currency. We have a good banking system. We don't really need Bitcoin, right? But people in Nigeria, people in wherever, Argentina, Venezuela, Zimbabwe, etc., they really need Bitcoin. They need something like Bitcoin. So I think this is really interesting.
Right.
So do you think Bitcoin could work if the value of the price wouldn't go up? Because one criticism of Bitcoin is that it's an NGU, numbers go up game. If numbers wouldn't go up, people lose interest. And we see that right now. We see since the all-time high, a lot of people lost interest. When I do a Bitcoin video now, I have so many less views on my channel than I had a year or 1.5 years ago. So it's obviously true that when it price goes down, people lose interest. So do you think Bitcoin could still be successful if the price would stay flat or wouldn't go up? Or is the appeal that the numbers go up? What would you say to that?
That's almost a philosophical question, you know. So in the end, one Bitcoin is one Bitcoin, right? This is a meme in obviously the Bitcoin space, Bitcoin Twitter every day. This is posted, and it has some truth to it. I mean, if you are believing in the system, and if this financial system works for you, then you can hold your money there. You can actually own your financial future. You can exchange this for whatever you want, and you can store your value there. And then it's the question of price is always supply and demand driven, right? And the question is, what do you measure it against? What's the price? Like one Bitcoin is one Bitcoin, but one Bitcoin is how many USD? One Bitcoin is how many bananas? One Bitcoin is how many smartphones? You know, and so it depends on what you measure it by. And if you measure something that is absolute scarce, there will never be more than 21 million Bitcoin. If you measure this by a currency like US dollar or euro that is ever expanding since, you know, the beginning of time, or it's mainly since in the last 50 years, this is always expanding. Obviously the price will go up. Now with Bitcoin, it only exists for a bit more than 10 years, and it went up and down all the time. It's very volatile because it's still very early. It's still in kind of the free market is still evaluating what price is one Bitcoin. And this is still ongoing, still very hard to find out. And I think it's almost impossible for Bitcoin to stay stable against any other currencies, because it's just supply and demand and free market. There's no way how Bitcoin can be stable against all these other assets. So either it fluctuates up and down, or it just like on a bigger time horizon, let's say 100 years from now, I believe we will look back at the Bitcoin chart, and it's going to make, in the 100-year chart will be like this, like linear up basically. But if you look at the 10 years or the 1-year chart, it's always going to be fluctuating, because there's a constant finding of the price against other assets. And some assets might like get more value, like appreciate against Bitcoin, but most other assets, I would believe, because Bitcoin is the scarcest thing you can own in the world, will probably depreciate. So the price will go up. So the number will, that's where the NGU number go up meme comes from. And I believe on the long time horizon, this will prove to be true. But in the end, it's strange. Like it is in one way, it's very volatile. So it's always going to go up and down. And in my opinion, in the long term, it will go up. But on the other hand, it's actually a stable coin, because one Bitcoin is one Bitcoin. It's the most stable thing you can have. Now, if Bitcoin stays for whatever reason, which I believe is impossible, but even if it, just as a thought experiment, would stay at like 20K US dollar for the next 10 years, I believe that we would not lose a lot of interest, but we also not gain a lot of interest. So the distribution all over the world, the network effects, the adoption would be a bit slower. Much slower actually, because what brings adoption, and that's what we see at Relai every day, is price fluctuations. Whenever there's times of stability, price stability, we don't have that much to do. It's that just people have their savings plans running, and they buy here and there and they sell here and there, but it's not a lot of not a lot of new people come in, press doesn't write about it, like it's a bit boring. If price goes down, people want to buy the dip. People think, okay, it's now cheap to buy Bitcoin, and I want to get some, so when it goes up, I can sell again. Like the speculators are coming in, and if it goes up, the FOMO is getting started, and that's where we have most work, most new users, the highest amounts of volume, because when it goes up, people just FOMO in, so fear of missing out. They think, oh, it's now getting to 100K, and I need to get in, I need to rush in. So definitely price volatility brings adoption or accelerates adoption. So I would say if price just stays very stable forever, then the adoption would be just way slower. But I think it would come anyway, because yes, speculation drives adoption, but ultimately what really drives the adoption is that it's just superior money. It's basically, in the end, if you look at it very rationally, what you want to own, where you want to store your value. And I think more and more people start to understand this, especially with things that happen now. The financial crisis, a bit more than 10 years ago, and the banking crisis, or I think we're still figuring out a name for this crisis, but whatever crisis is happening right now, the more of these financial crises will happen, the more people will understand where their money is actually safe.
But if you're cynical, isn't that proof that it actually only works if the numbers go up? So that this theory must be right? Because if people wouldn't buy the dip if they thought that the price would stay the same or would go down. They buy the dip because they think they will 10x or 30x their money in 10 years. But on the other hand, I think you're arguing that because of the characteristics of the 4 years halving cycle and more people, basically the demand is getting bigger, the supply is getting smaller, or the new supply is getting smaller. So market forces should have the effect that price go up. But it also could be just a self-fulfilling prophecy, right? Because everybody thinks that the price will go up, so everybody buys, so that the price actually goes up. And then the question is, will the utility be big enough in 10 years, in 20 years, whenever we reach the magical, I don't know, 500K or 1 million per Bitcoin? What happens then? Does then everyone sell, or does then everyone expect that it goes to 10 million? So what do you see like the future speculative environment? How can this continue? Let's say we hit the 500K in the year 2028. What happens? What happens then, in your opinion?
Yeah, this is hard to say. This is like the end game scenario. What's going to happen if actually what we Bitcoiners think will play out? That the traditional centralized financial system, fiat-based financial system collapses, and Bitcoin is kind of the safe haven where everyone wants to emerge into. It's like the Arche Noah in German. I don't know what's it in English, but like it's where it's the only safe place where you can put your money, basically. Then I think that another meme could come in where it's first slowly, then suddenly. When really price goes up because of a reason, because of the financial system slowly but steadily starts collapsing, and the trust starts eroding. Then and Bitcoin really hits 100K, 200K, 500K in a matter of a couple of weeks and months, which is possible. And people believe that it's still the market, the potential market, a total addressable market, is still way bigger. Many people argue that it's 1 million, 5 million, 10 million. Actually, some argue that Bitcoin will basically suck in all the monetary energy of the world. So not only the gold price is the market, or all the other derivatives and everything, but it's just all the money in the world is actually going to flow into Bitcoin at one point. Then it's obviously way higher, and then the faster this plays out, the more possible it becomes that it's going to get really hairy and it's going to get very chaotic, because people will just try to rush in any means into Bitcoin. And at a very small scale, we see this now, where banks start to look, especially in the US, but it's going to be a contagion effect in the whole world. So banks look less secure to hold your money. So people are looking for other ways, and a lot of people are basically now withdrawing their money from banks and put it into Bitcoin. So again, supply and demand. Supply is fixed, so the demand is higher. So we saw, I think, a 15% increase within 24 hours of the price. If this starts to play out on a bigger scale, where not only retail investors and like small institutionals, but big institutions like Apple, Google, Amazon, like these big companies start to put at even 1%, 5%, 10% of their treasury, of their balances, their billions, tens of billions, hundreds of billions of capital flowing in, then this could really start to freak everyone out, and like everyone wants to get in, and this could be very very messy. How exactly it's going to play out, look, I don't know. I hope it's going to be in a bit ordinary manner, so just like step by step, more people find out that it's a good thing to own a little bit of Bitcoin, and then so more and more people start to hold a bit more Bitcoin, and the price will go up steadily. I think that would be best for all of us, but there is a possibility that all of a sudden it goes from 20K to 50K to 100K to 500K, and then everyone's trying to rush in. There will be a big frenzy. I can only imagine how this would work. It's kind of going to be a bank run, trying to get as much fiat money you have and put it into Bitcoin. But yeah, let's see. I don't know. Maybe
I've started posting these charts on Twitter just as a thought experiment. So what if Bitcoin would go to number one? So based on silver's market cap, we have a 2.5x upside. Based on gold's market cap, we have a 25x upside, and we have almost 500 trillion in global net worth. So based on that, we could see an upside of more than 1,000x, of course. And then the question is, how big will Bitcoin then be the global reserve currency? Will everything be measured in Bitcoin, and how much of the global net worth in the end will be in Bitcoin? So that's just a thought experiment, but it shows that it could go way bigger than people realize and anticipate. So I would say that gold's market cap is absolutely possible. For me, it's even better than gold, so it should be a multiple of that. And even gold's market cap, I think, would be 500K, right? In I think with the current prices roughly. We could. I think this is absolutely possible in my opinion. And then the question is, exactly as you say, how big will the bank run of the old financial system be? I think Elon Musk said it, that I think it was Elon Musk. He compared the fiat system with the crypto system, or with Bitcoin. He said that basically Bitcoin is a competition for the traditional banking system, of course, for the traditional fiat system. And it can only exist, or basically the worse the current fiat system is, the better the other system will be comparatively. And I think we are starting to see that now with the banks, with bank runs, that we are seeing a lot of trouble in the old financial system. And I think a lot of people are fed up with the traditional financial system, especially young people. I also think, if we think maybe philosophically, if we start to build a base on the moon, if we start to build a civilization on Mars, do we really want to recreate bank buildings? Do we really want to have like closing hours at 4 p.m. and not open on Saturday, Sunday, and 20 other bank holidays that we have per year? Do we really want to recreate that? Of course not. So we will have a global financial system. The only question is, will it be Bitcoin? Will it be something else? Who knows? But I think this is one of the appeals. And so maybe when we go back, did you study the history of Bitcoin, and why do you think it started? So at one point it had no value. Then there were these pizza transactions, and then first exchanges came up. So how did we get from these a few cents per Bitcoin to now 26,000? Was it just based on the characteristics of Bitcoin, of this scarcity, or did people thought they would become rich? What's your feeling? How did we get from zero to here?
That's an interesting question. I think it actually started before Bitcoin was even created. There were already, like, as the idea of a digital internet native currency or store of value, like this digital gold idea, that internet should have its own money, is as old as the internet itself. It started in the 80s, where entrepreneurs started to create companies around this idea, and some of them got really close, like Hashcash, for example, or eGold, or these are all projects that tried to create this global, digital, decentralized, neutral, open to everyone currency that is internet based, but they all failed at one point, and at one aspect. And even huge companies like PayPal, for example, from Elon Musk and Peter Thiel. And Peter Thiel talks about this still today. At his last talk at the Bitcoin conference in Miami last year, he said exactly that's the Bitcoin is actually what they wanted to create, but they didn't get to it. So they created another centralized monetary network. But actually what they wanted is a decentralized, censorship-resistant one that is purely internet-based, that cannot be regulated, cannot be shut down, cannot be controlled, assets cannot be frozen, transactions cannot be blocked, and all that kind of stuff that we have now with Bitcoin. So Bitcoin in 2008, 2009 was just really taking it was built on the shoulders of giants, as you say. It's like 30 years of innovation that a lot of it has failed. They just put all the pieces of the puzzle together and created something that finally works. And it was funnily coincident with the financial crisis of 2008, 2009. That was exactly how it came to life, with an anonymous, still to this day, anonymous or pseudonymous founder, which I think was also instrumental to the whole story. So the founder, or most likely founding team, really thought this through, because most likely that's what people speculate. They are the same people that already tried for decades to build these systems. So they knew, they already failed a couple of times. Mainly, they already also always failed because they had a central party that was a security hole, or just a central point of failure that could be regulated, could be shut down. And so a person like a CEO, a founder personality, a founding team, a company, a foundation, whatever, these are legal instruments that can be shut down, and that happened to most of these projects. They either got hacked or they got shut down by the government, because obviously they don't want competition in money. And so Bitcoin was the first protocol that achieved this. And at the beginning, it had no value because no one really used it. No one even knew it. It was only known to a couple of dozen people on, some cypherpunk freaks. And so they didn't really give it any value, and no one else even knew about it. So again, value is demand and supply, and so no one really demanded it. First time it really got value was when people started to understand the potential, how valuable this potentially could be. And Hal Finney already said, I think 2009 or 2010, Hal Finney is now dead, but he's believed to be one of the founding people, or at least one of the first guys who transacted with the network. And he already said back then, as visionary as he was, that one sat could be worth as much as $1 at one point. And like one Bitcoin could be worth millions, because it's just perfectly designed to store value. And
just to clarify, what's one sat, and how much would that be in per Bitcoin?
Yeah, good point. One sat is 100 millionth of a Bitcoin. So you can divide Bitcoin in 100 million units, and one is a sat. This is abbreviation of Satoshi, and Satoshi Nakamoto is obviously the founder, or the name of the founder or founding team that has brought Bitcoin to life. And so one sat today, I need to check for you how much in, let's say, USD this is. Right now it's 3 cents. So one Satoshi is around 3 cents right now as we speak. Yeah, so it's not a lot yet, but according to Hal Finney, this could go up to dollar, and one Bitcoin could be several millions of dollars. And so more people started to understand the characteristics of it, why Bitcoin works, why can't be stopped, it can be held non-custodial, like people can hold it without any third party. It cannot be debased or just printed away by central banks. It's digital, you can send it around very easily through the whole world for a fraction of like a dollar, so very low amount. It's unstoppable. You cannot censor it, and so all these great and it's scarce, so it's kind of a digital gold kind of thing. So all these things that now are studied, really, there were some visionaries that already then understood this, and that's why they were just buying $100 or $200 worth of it. So that's where a price started to appear first. The first price was actually, I think, 10 cents, because at this point in time was probably 2010 or something. 10 cents was exactly the amount of energy, like the price of the amount of energy that you would use to mine one Bitcoin. So the first Bitcoin got sold for 10 cents. And then from there on, it was just really there were first exchanges kind of happening. And so from there was this price finding process. Some people bid maybe more, because I don't think it's only worth 10 cents. I think it's worth 15 cents. So I'm willing to buy 15 cents. And so this is how it went up and up and up into this famous pizza day, where someone paid 10,000 Bitcoin for one pizza. I think it's 2011 or something. And then it started to also work as a transaction, a medium of exchange, as a transacting mean, and that's how it accrued more value. And then all these speculation bubbles came. But it really, where it started was people were just buying a little bit in case it catches on. This is another quote. I don't know if it was from Satoshi itself or also from Hal Finney or some early guy, like maybe Adam Back. Someone said, it might make sense to just buy a few in case it catches on. And if you had done this in 2010, 2011, I don't think you would need a job anyway today.
And to come back to the $1 equals one Satoshi, it would be $100 million per Bitcoin, right?
Mm-hmm.
So it's a huge number. And I think I just looked it up. I think it's even 0.02 or 0.2 cents. It's a really small number. So long ways to go to $1 right now. So we have a question here from Jonas. What do you think would happen if a country like Switzerland or maybe even the US would ban Bitcoin because they can't control it? What would happen to the Bitcoin community in that country then? So do you think Bitcoin could be banned in like a Western country, or more broadly, what do you think the government could do if they would really see it as a threat to the financial system? I don't think they would just go without a fight, right? So what are the ways they could find it? Could they tax it 90%? Could they ban exchanges? What else could they do?
Yeah, that's a good point. So obviously governments and countries can do a lot. They can ban stuff. They can, as you said, tax things. They can ban also different things. They can ban owning it. They can ban exchanging it, and they can ban producing it, so mining. And all of these things already happened in different countries of the world. So for example, China banned mining. They also, I think, at one point banned holding and exchanging. So yes, Bitcoin can be banned by countries, but no, Bitcoin cannot be stopped, in my opinion, even through that, because it's already, as you said at the beginning, it's a global phenomenon. So if you really wanted to stop it, it would require a coordinated effort from pretty much all countries. So all countries, all governments in the world, pretty much at the same time, would need to ban it. So it can't really, Bitcoin could not escape, and it would really drive Bitcoin to a black market. Even there, you couldn't stop it, because that's what happened, for example, when the US banned gold. gold is independent from any government, from central banks, from banks. You can just hold your gold. You can have it in your pocket. You can run away. You can transact with people that are willing to accept gold. So the only thing that does, if one country bans something, is the activity spreads into other countries that do not ban it. That's also what happened with China. China banned mining, and like the hash rate, so the whole mining power that is invested into securing the Bitcoin network and to mine new Bitcoins, I think 30% of it within a couple of weeks really flew from China to other countries. So the hash rate dropped 30%. And a couple of months later, it was back at an all-time high. It's now back at an all-time high again, even though China has still banned it. So what happened is the miners just said, okay, you guys are banning Bitcoin mining here. I take my stuff, I fly to another country, and I set it up there. And actually, they, I think, in the process found out that there's some cheaper and more sustainable energy in other countries to use, and that they have way more flexible and open friendly regulations. So these entrepreneurs just, because we live in a global society, they just go into another place and do their thing. And that's exactly what happened. So I think, yes, you can ban it in certain countries, but it would be a disadvantage. It will prove to be a disadvantage for countries to ban it, because they can profit from it. They can have like successful entrepreneurs building billion-dollar companies in this industry. They will pay taxes. They will have a lot of employees. They will buy property and everything. So they will increase the value of the country in the end. That's what happens in El Salvador, for example. A lot of Bitcoin entrepreneurs go there, and they increase the way of life, the quality of life there overall. And that's what you lose out if you, as a country, decide to ban Bitcoin. And so, yes, you can ban it. You cannot stop it, because it would require really a global joint effort from all countries, all governments, to ban it right now. And even then, it would continue to work, because how do you know whether or not I do have Bitcoin? As a government, how do you know? You cannot know. You cannot know how much taxes I should file. You cannot take it away from me. I might have 12 words in my head that's worth 10 million. You don't know. So it's really hard. I think that's also why countries don't really try anymore. I think most of the sophisticated countries have kind of understood that and go rather the other direction of trying to create circumstances that are favorable for Bitcoin to attract all this activity, to attract this whole new industry that is being built, and in the end have a big piece of that. I think that also makes more sense from their perspective.
And what do you think if, let's say that the US with the US dollar really sees it as a threat to the US dollar, sees it as a threat as the US dollar as a reserve currency, and really wants to clamp down on it? Maybe they understand they cannot ban it outright, or it wouldn't have an effect. How else could they hurt the ecosystem? What do you think if they really wanted to fight it? What tools do they have?
Yeah, they could tax it. I think now they already start with this in certain states. They tax, I think, energy that is used for Bitcoin mining at like 30%, some crazy rate. They could tax the ownership of Bitcoin, obviously, and then this would exactly have the effect that these people, which are entrepreneurs, investors, rich people that actually a country like the US want to keep, they would go to any other country. For example, El Salvador or Madeira or Central African Republic, and all these early movers, these nations that are outspoken, open to Bitcoin, and there are many more to come. Especially in South America, Uruguay, Paraguay, Brazil, Argentina, big countries are thinking about it and are becoming more and more open to the fact of Bitcoin. And so they will just go away and they will do their thing in another country where they sometimes even have zero tax to attract, because they understood that this is a very attractive industry to have in your country. So they try to attract rich people, and that's a game that is as old as nations. Nations always try to attract rich people to increase their living standards and to make, in the end, to make money and keep money in the country. And I think that's how politicians think about it, those who understood it. And if not, they will start, taxing, and they will start making the life of Bitcoin holders and miners harder and harder, with the only effect that these guys will move to countries where their life is not hard.
Absolutely. So we here have a question by Blockchain Kette. What are your points to orange pill people? So orange pilling is basically convincing people of Bitcoin become Bitcoiners. So what would you, when you meet a random person who's just asks you, what do you do, and is open to the idea, never heard of Bitcoin, how would you orange pill them so that they buy their first Bitcoins or understand the significance of it? What would your elevator pitch be?
No, that's hard. So like, I would always try to start with the problem, not the solution, because what Bitcoiners mostly do is they have this solution that they like a lot. They are in love with Bitcoin, and they try to put it down your throat. So they tell you everything that's super cool about it, like this is so great and this decentralized and censorship resistant, and there's only 21 million. You should get some of them, and this is where most ordinary people just start. Whoa, okay, like, I'm fine with my bank account and credit card, especially as you mentioned before, in Switzerland, we're fine. Like, why would I like bother with opening an account somewhere and wire money and buy Bitcoin, and then I don't know how to hold it? And no. I mean, they don't see the added value. In order for people to see added value, and kind of a benefit, and the reason why they should engage with something, they need to have a problem. People are problem solvers. So I always start with the financial system, the banking system, how fucked it is. And it's getting easier and easier to argue why it is fucked. For example, you hold money on a bank that is actually devaluating at the speed of, depending on where you are, if you are in European countries, between 8 to 10% a year. So you lose basically half of your purchasing power within 5 years. Plus, it's not really safe there, as we saw. You have a counterparty risk. So someone holds your money, you don't know if this company still exists tomorrow, and your money can be gone. There's a risk even. And they charge you for this. So there's fees involved. Every time you want to, even just for them holding your money, every time you want to transact with your money, you want to pay something, you always pay something. And they're not even really good at their job, right? So all of this, especially also the counterparty risk, where this is usually where it clicks with people, and they see, okay, that's not how it should work. Like, I'm just losing the purchasing power of my money, and someone holds it for me, and they can block transactions as well. You cannot withdraw sometimes. You can you have limits on how much you can spend. Sometimes they just block your card because they found some suspicious activity, and then you need to call them to actually, so that they actually let you transact. And these are things that people don't like, right? And then once they understood the problem after this first minute, then you can come with the solution. So actually, there's a way out of this. It's called Bitcoin. It's already more than 10 years old. It has a proven track record. It always worked. It never failed the last more than 10 years. It's global, so you can send your money everywhere you want. You can send it now from here in Zurich to Senegal within a second. It costs you almost nothing to transact with this. No one can stop it. No one can censor it. You can own it yourself, so you don't have a counterparty risk. And there are only 21 million of it, so no central bank can come and just print more. There's no inflation. There is an inflation, but you know exactly how it's going to be, and it's going to be less and less. So Bitcoin actually will hold its purchasing power. It will even increase. because of the supply and demand. So it's like, you can understand it's something like digital gold, and gold has been around for centuries, actually thousands of years, and has always been used as an independent store of value, independent from government, independent from the banks. And if you look at the purchasing power of gold in the last 100 years, a certain amount of gold still buys you a nice suit, for example, or it still buys you a liter of oil or whatever. The same suit or the same oil used to be $10 back then, and now it's, hundreds of bucks or even thousands of bucks. So it's a system that is just, stable and makes sense to hold your value. So the Bitcoin is like gold in that regard, but it's digital, and it's way easier to transact. It's way easier to make smaller parts of it and put it together in bigger parts of it. It's easier to use. It's basically easier to use gold in a digital world. And so, yeah, I think you should buy some in case it catches on. That would be probably my pitch. It was too long now, but just to give an idea on, maybe, depending on how much time you have, these are kind of the arguments that you can give.
Yeah, absolutely. So yeah, going back to the number of people who own Bitcoin, just rough guess, how many people do you think own more than 1% of their net worth? Because if you just own $10 of it, I mean, it doesn't really matter. Or if you're a millionaire and you just hold $1,000 of it, it's not really relevant. Yeah, how many do you think really own a significant, like more than 1%? Just a rough guess out of the 300 million you said.
Yeah, I would probably think not that many. What did you say? More than one Bitcoin?
More than 1% of their net worth.
1% of their net worth. Well, I think younger generations are more prone to hold 1 to 10% or even more of their network, like in the net worth. For example, Gen Z and also millennials, I think there it's not really uncommon. For example, there's the study of millennial millionaires. 85% of millennial millionaires, so people between 20 and 35 years that are millionaires, that own more than $1 million, hold a significant amount of Bitcoin. So this significant amount, I would assume that it's more than 1%. This is very high, but obviously then for the other generations that are still roughly 50%, like the older generations, the boomer generations and others, they most likely, all of them are below 1%. So I would say it's very hard, but from these 300 million, it's probably less than 10. Is it between 5 and 10% of that? So maybe between 15 and 30 million. That's my guess. And out of the 15% of the Swiss people, yeah, maybe it's more. Maybe I can imagine that maybe 1%. maybe it's between, maybe it's up to 1/3 of it or 1/4 of it.
Yeah, the question is, what do you count? I mean, does it matter if you have a $1,000 net worth? If you own 50% of it, it doesn't really matter in my opinion. So probably you should take people who have more than 100,000 net worth. Do they have more than, I mean, just $1,000 in Bitcoin is basically nothing, but it would be 1%, right? So
yeah, maybe it's more. Maybe I'm underestimating, because people who do hold Bitcoin usually hold it for a reason, not just for fun. So maybe they would actually even hold more than 1%. Yeah, maybe I'm underestimating. Maybe it's like a third or even a half of all the people that are now own more than 1%.
Yeah, what's interesting, I just Googled, I haven't fact checked, but there seem to be 47 million millionaires globally. So basically, even if every millionaire would want to buy one Bitcoin, they couldn't do it. So a millionaire could not even buy half a Bitcoin. And a lot of Bitcoins, maybe we can talk about how many Bitcoins were actually already lost, irreversibly lost. I think there are estimates that millions of Bitcoins are already lost. People who forgot their keys or died or whatever. So probably will only be 15 million or 14 or 17 or whatever it may be, millions Bitcoin. So the 21 million is impossible because a big number has already been lost. So if we take that, then all the millionaires could only buy like a third of a Bitcoin, right? And then we are not talking about billionaires. We're not talking about family offices. We're not talking about hedge funds. We're not talking about companies or organizations or even states and whatever. So and we're not talking about people who are just would have a net worth of 500,000. So they could also they would also want to own one Bitcoin. So I think you're absolutely right. Own some if in case it catches on. So I would say if you have a net worth of 500,000, you should own one full Bitcoin, and then you are ahead. Then you have 3 times more than an average millionaire in the world could buy if all millionaires wanted to purchase a Bitcoin. So I think that could be a good strategy. And of course, if you're young, if you're super young, then of course you could be even more aggressive, because you can, even if it doesn't work out, you can make it up with your job and stuff. So I think there are a lot of good arguments on the plus side. So do you have some kind of valuation model? How would you value Bitcoin? So right now, 26,000. Is that overvalued? Is that undervalued? What would be an intrinsic value right now? What would be a fair price? Do you have some kind of valuation model that works? Because if you have a look at companies, at stocks, you can always have a look at their cash flow. You can use discounted cash flow analysis. You can, when you look at whatever bonds, you can look at the yield that it generates. But Bitcoin doesn't generate any yield. What is the fair value? What kind of models do you use to see whether it's undervalued, overvalued? How do you think about valuation?
Well, it takes me back to the point a bit of it's valued against what other currency? Like, we are measuring a system that is scarce, Bitcoin, with a system that is ever expanding, like the US dollar, which is right now the global reserve currency and the unit of account. So you measure everything in that, but it's like measuring something with a yardstick that is ever expanding, right? So obviously it will be bigger and bigger, but actually in the real world it stays the same size. So in that regard, I think the valuation is almost limitless. And there's another meme out there, is the value of one Bitcoin is 21 million divided by infinity. So it's actually, the value can be almost infinity. But yeah, that's also gets into very philosophical spheres here. But just to show, like, kind of it's hard actually to talk about valuation with something that is ever expanding and always getting bigger. So it will always get bigger if we continue like that. And I don't believe that the financial system will ever go back to a like gold standard where things are pretty much fixed. It is just an ever expanding monetary base. Otherwise, the whole world will almost collapse at this point. But what you can take as, if you look at the US dollar being quite stable and being the unit of account, which now still is the case, then you could look at, for example, as you said before, the total addressable market analysis. And what you showed before is how much is silver worth, what's the market value exactly of gold, and what's the global money worth. And so then you can say, okay, if Bitcoin takes all of these markets 100%, then that's what it's worth. Maybe you argue that it's not gonna take 100%, it's maybe gonna take 50% or 10%, and that's how you can basically come to a number. And that's a very, because that's a method that is used, and that makes sense for something like Bitcoin, because what is Bitcoin? It's not a company, so it doesn't make revenues. There's no CEO, and there's no central team, and so why would you compare this to a company? It's not a revenue generating thing. So the whole net present value and all these other methods that are used for evaluating stocks and companies, they don't apply. What would apply is something like gold, because gold is a commodity, a physical commodity, Bitcoin is a digital commodity. It's even regulated like this from the CFC in the States. So that's kind of and how gold is now evaluated. It's exactly how it's exactly the total addressable market, and it's the market value of what is the market of holding your money in gold. So, for example, in the example of gold, these are 12 trillion. Parts of it are because of industrial value. You use it for your teeth, you use it for your gold watches and gold chains for the wrappers and everything. So that's a bit, yeah, that's worth. No, sorry, there's actually two. So industrial value that you can use for chips and stuff like that, and then there's a luxury value. You know, there's gold in Rolex watches, for example, and gold chains, and then but most of the market capitalization of gold is actually monetary value. So people just hold gold in their treasures, in their safes. Nations just hold gold. Central banks hold gold as a store of value. So this is the monetary market, and that's, I think, I just throwing out a number there. It's probably around 80% of the whole value is monetary value. And so if you say Bitcoin, as we become more and more digital, Bitcoin will take half of the monetary value of gold in the next 10 to 20 years. Then this would be like 10 trillion divided by 2 would be 5 trillion. And so it would still be probably a more than 10x from now. So more than 10x from 20K would be around 250,000. So that's kind of how which I think is actually reasonable for like the next 10 years for Bitcoin to reach 250K. I would not be surprised. So that's how I kind of think about valuation of something like Bitcoin.
Yeah, and I mean, I understand your arguments. So you say that yeah, have some in case it catches on, but of course you wouldn't have founded 3 companies if you just thought in case it catches on, right? So what would be the case of really going in? What would you recommend to someone? So what if somebody inherits $1 million tomorrow? Would you then, or what if you would inherit $1 million tomorrow? What would you do? Would you go all in Bitcoin? Would you diversify also into stocks, buy some real estate? Would you just DCA in over a certain period of time? Would you buy everything at once? How would you think about it if somebody would really see the future? Okay, the current financial system is broken. We need a global something. Bitcoin has the best chance of doing that. It has a really good track record. I think it will really work. It will go to half or a full gold value. So then it really makes sense to not just buy 1%, right? Then it makes sense to be a little bit more aggressive. So how would you go about it? Because I think when you think like that, then you get very soon to some challenges, because the challenge then, I mean, if you just buy $1,000, it doesn't matter if you lose it or forget the keys. But if you buy $1 million worth of Bitcoin, then you really need to have a strategy where to store it, where to diversify, how to even buy it. Because whether you pay 0.5% or 2% fees, it really matters with 1 million. So all of these questions. So I think let's go to this aggressive state. Somebody who has a net worth of, let's say, 5 million wants to buy 1 million worth of Bitcoin. What would you tell to this person? And this person doesn't have any deep knowledge right now. They just did some due diligence and really want to now dive in and go in. What do they need to know to be safe in this new digital world?
So there are probably 2 questions in that. One I find really interesting is, what if I inherit $1 million today? How would I invest it in, and how much would I put in Bitcoin? I think that's an interesting thought experiment for everyone to do. I would do the same as I do now, like how I divide my very modest wealth is I put half of it in Bitcoin, and I would with $1 million, I would probably do it not all in once, but also not via like a 2-year DCA. I would probably do it in 5 to 10 installments. Or maybe even less, maybe 3-4 installments. That's actually also what a lot of our high net worth clients are doing at Relai. We have Relai Private and Relai Business. So Relai Private is for high net worth individuals that want to invest more than 100K in Bitcoin or also sell. And businesses, Relai Business is obviously mainly SMEs that want to put some Bitcoin on their balance sheet. And so they usually either do it all in once if it's a rather small portion of their wealth and if they think the price is right now, or they put a couple of installments, like let's say 500K, they divide into 5 and 5 times 100K, so you kind of DCA, so you profit from the dollar cost average effect as well in that transaction. I would probably do this, like the latter, and the rest, a little bit, I would put into the stock market, into like dividend stocks that are usually stable in price, and it's kind of like an ETF style of diversification to just build a diversification around the global economy. And what else? Maybe a little bit of gold. I'm personally not an real estate guy, because and also actually not a gold guy. So I don't know if I would buy a lot of gold, maybe a little bit, but I rather usually like assets where I can, that there's no physical limitation to it. So I can just travel around and take my assets with me, basically, in the digital world. But that's obviously, really subjective to everyone, how to store their wealth. But in terms of Bitcoin, I think most of the people who really understand Bitcoin, they would put some considerable amount in, between 1 and 50%. For me, it would be more 50%. I talk to people on a regular basis that have like 90, 95, or even 99% of their wealth in Bitcoin, which I understand, which I think is cool. I try to live on a Bitcoin standard, but I also think it's very early and it's risky because of the volatility that still is here and still will stay for a couple of years. Obviously, the volatility is going to be less and less, and at one point in maybe 10, 20 years, it will be rather stable. But now it's still kind of a Wild West situation where the volatility can be really like 20, 30, 50% every day. And you don't want to be forced. You want to still hold some cash or some very other more stable liquid assets, because you don't want to be in a situation where you are forced to sell your Bitcoin at a low price. It's usually when all the markets crash, that when also Bitcoin crash, and then maybe you have something, you have some injury, or you need to you have a car accident, whatever, you need money. And then you are forced to sell at a low price. That's what you want to avoid. That's why you should have at least 10, 20, up to 50% in cash or other liquid assets that you can turn around really quickly and that are stable, so that you're not forced to sell Bitcoin. But in the end, what I also find interesting is, like, you will hold this on the long run, right? So if you get 1 million today, unless you want to buy a house or a Lambo or Maserati or whatever, you will not use this money in the next couple of days or weeks. You will not use it for years, probably. So then it really becomes important to think about how to store it in the long run. And what usually is true, if you have it in fiat money, then on the short run, it will be stable. But on the long run, it's going to go down. On the other hand, if you hold it in Bitcoin, on the short run, it's going to be volatile, but on the long run, it's going to go up. And that's where I would like to put at least half of my wealth, if I had any wealth.
Yeah, because you believe that your valuation is basically roughly half of the gold market cap, right? So you would expect roughly a 10x. Over what period would you expect that? You said 10, 20 years. That's a little bit fuzzy. Do you expect it in this decade, or would you be happy if it would be later? What's your time horizon for that?
Really hard to say. That's something that Warren Buffett got right. He said it's rather easy to forecast a direction, but it's very hard to forecast the timing. So it might, like 100K, we might achieve it this year, but it might also take 10 years. So I would rather go for 10 years to reach this valuation, maybe even more. But I want to be a bit optimistic, and I think it will be kind of a slowly but suddenly movement, because I learned about Bitcoin in 2015, and then a lot happened until beginning of 2018 in terms of price. Like we went from 500 up and down to at one point 20K, and then went down again before Corona to 4K, or right at the Corona thing, 4K, and now it's still at, okay, it's at 26K, but a couple of days ago we were still at 20K. So between 2017, end of 2017 and 2023, so in 6 years, actually the price didn't move. If you held it for these 6 years, the price didn't move. So that's
a lot of people bought at the top, right? I mean, that's the psychology of it. So when it was 20,000, people were expecting 50,000. I was there. I expected, or not expected, but I thought it was possible. I didn't buy at 20, but it was possible to go to 50. And when it was 69, 1.5 years ago, people thought now it goes to 100, 150, 200. So I think that's the big problem, right? And then I think the problem is if people don't do their research and just buy purely on speculation. They bought at 70, now it's 26, then they lost 2/3 of their investment. So of course they would have a bad experience about it. And the same when they bought at 20K in 2017. So I think you also need to be a little bit cautious, right? So if you inherit at the top of the bull market and you put all your million into that at that point, then at one point it might go down 70-80%, as it did a lot of times. So you have to expect that. I think that's an important thing. But I think it's more to have proper financial principles, right? I always talk on this channel, have a cash reserve. Personally, I always have a cash reserve of at least 1 year, better 2 or 3 years of living expenses. To not have to sell at a bad moment. Of course, you have to be able to afford that, but I'm in a fortunate position that I can, so I do that. Then never use leverage, never use debt, things like that. And I think we still have a lot of bad habits in the ecosystem, because we have a lot of young people that are speculating. They think they can get rich with crypto, and they never experienced the .com crash. They didn't experience the big financial crisis. So it's clear that they need to learn that times are not always rosy, right? And that things can go wrong, and probably will go wrong at one point. So I think having proper habits is, of course, always good. So it's not just about Bitcoin. I think it's also about just proper financial education, proper personal finance, earn more than you spend, and things like that, blah blah blah. That's important. But then I would I would also say that right now I would believe that the risk of not holding any Bitcoin is probably larger than the risk of holding some Bitcoin. And then it's just a matter of whether you own 0.5% if you have if you're super mega wealthy, or if you go up to whatever 50% as you do. If you can take the risk tolerance and really have the conviction that it will work out in 10 years. So I think we have this spectrum. And then I think what's also important to not just look at the speculation, at the numbers, but to really, and that's why we do this deep dive today, to really understand why it is interesting and why it really has value. We can debate how much value it has. We can debate how to value it. But I think for me, it's clear Bitcoin has value. It's clear that it is an innovation that's important, and that it will continue to flourish in one way or another. The question is only how much and how fast. So that's why I'm in it, and I also see it as a alternative to the current financial system that we have. I see it as an insurance against whatever government abuse and all of the problems we have in centralized institutions. So I think it has a lot of good things going for it. And we also have a question in that regard. So Chris says, do you believe Bitcoin, being honest money that cannot be diluted, is the best tool we have to fight the fraud and corruption of the current debt-based system? Do you have a perspective, and why?
Yeah, that's a very good point. I mean, that you can think about how a world would look like on a Bitcoin standard, right? So we went basically from a gold standard to a really debt standard. So someone also said, I think maybe it was Hayek or some economist said, gold is money, everything else is debt. So money at this point has become just debt, and it can be created by banks that clicking a button and they lend money out that they just created to people, and so it's ever expanding. And then the next step, in my opinion, could be a Bitcoin standard, where again, money, there may be different forms of money, there might still be national fiat currencies and everything, but it is going to be bound to Bitcoin, because Bitcoin is becoming money and everything else is just debt. It's another financial instrument. So what would such a world look like? I mean, for example, the Silicon Valley Bank would not have been just saved by the Fed within 2 days. Within 48 hours, they just clicked the button, created 200 billion. It was basically essentially a loan. And so, okay, everything's fine. So these fraudulent systems, mostly banks and investment banks, they can just create they can take massive amounts of risk, and not pay for it, because if they fuck up, then they will be bailed out by the government. They will just print money and they get the money back. It's like you're in the casino and you're playing, and if you lose, you get more money. You can just always go to the ATM and get more money and lose your shit again until you win. So of course, these banks will win against private, people that don't have this hack, basically. This creates a lot of fraud, and also, for example, wars. Wars are one big reason why banks even started to exist and have become so popular and so powerful. Banks basically were started, like the Bank of England, for example, has started just to create and lend out money to finance the war and the expansion, the colonialization of the UK. And all the wars, basically, also all the US wars where they were involved in, were financed through debt, through money that just was printed. And war, obviously, I think we all agree, is a bad thing. So now, if you think that in a couple of decades, all, like, the world is on a Bitcoin standard, and all the governments and all the banks need to adhere to this standard, because the only thing that really is counted as money is Bitcoin, and this is scarce, so you cannot just print it. Then things like very risky behavior in the market by banks and wars by governments could not be financed that easily anymore. So you would really start to think hard again, what should we finance? And why, and how much money should we put into it, because the money is gone. There's only so much money and it's gone. This is total different thinking than, oh, look, let's take the risk. Let's just, create 1 or 2 trillion to beat another country. So I believe that Bitcoin, in that regard, is a more honest money that will have less fraud, less risky behavior, and less war in the end, less negative behavior and activities as a consequence. What do you think, Remo? Do you have another perspective on that? It's an interesting question.
I think it's an interesting question, and I think, really, people. I mean, I studied business in economics, right, at the University of Basel, and to this day, I don't understand how the old financial system really works. I mean, I studied it.
I studied it at the University of Bern, and I also don't understand it.
I don't understand how central banks really work, and it just seems really antiquated. It seems really complicated. I don't think that central bankers even understand it themselves, is my honest opinion.
No way.
And especially the fractional banking system. I think people have no idea that they couldn't get all their money from a bank. And I think that we should really now stress test banks to really try to withdraw like big amounts and really stress test them, because it's just built on such a weak foundation that if you withdraw more than a few percent, that everything shuts down and cannot work properly. It can't be like that. So and I also think you're right that if you can create money out of thin air, then you can waste it for things that are not really valuable, like wars and stuff like that. So I think that's a really good argument. I haven't thought about this in that way. And I also believe that it really should have it really should be expensive to like create loans or it shouldn't be as easy as it is right now to bail out big institution like that. I think Bitcoin has certainly a potential to be a more stable, more honest system. Of course, it's not perfect because there are still humans involved, and humans are not perfect. Humans are greedy. Humans are flawed. So I think the human element won't go away even with the Bitcoin system, of course, but it won't be as abusive, or we as citizens don't have any control over central banks. We don't have any control over how fractional banking really works. And as you said, banks can stop your withdrawals at any time. You can be required to document your stuff or call them, or they call you. I mean, I sold a company. Whenever you wire more than $100,000 in Switzerland, you always have to like call them, and they need to call you, and it's a nightmare. And with Bitcoin, you could send $1 billion to Australia, and it would be there in an hour when you send it through the main network, right? So
it's
I think
freedom.
It is freedom, but with freedom also comes responsibility, because if you lose your keys, then you're completely forked, right? So you really need to that's why education is so important. So if people really want to get on the Bitcoin standard and really live Bitcoin, then they need to have a proper strategy, because you can have an elaborate security system, but then if you can get attacked with a $5 wrench attack and it doesn't you didn't take that into account, then you're also fucked. So it needs to really be I think if you really take it seriously, it becomes really complicated. Because what do? Do you hold it at home? Do you hold it in a bank? What happens if shit hits the fan? Banks close down, so you don't have access to your safety deposit box. So you need to have a private safety deposit box somewhere. Do you use multi-sig? What do you do exactly? So I think if you really own large amounts of Bitcoin, then it becomes complicated really, really fast. And I think that's why better solutions are needed. So the user experience needs to be better, like the Casa team is doing with the multi-sig solution. I think is really good on the market. But I think we need way more innovation like that to really secure Bitcoin and secure it in such a way that that you can inherit it, so that your Bitcoins aren't lost when you're suddenly when you get hit by a bus. And all of these things, you really need to think it through. And I don't think it's easy. And that's, I think, why these centralized institutions exist, like Coinbase, because it's so much easier to outsource this responsibility. But with outsourcing of this responsibility comes the problem of a central third party, which we now had last year and this year, the huge problem. So I think, again, my conclusion is we are still super early. People don't understand it. They don't even get the fundamentals, how a block. I mean, how many of those 300 million people could really explain how a Bitcoin block is generated, how it really works? I suspect less than 1%. So we are so early. But if you take it seriously, then so what would be the step? I mean, you could start selling your products and services for Bitcoin, so that you then have an income in Bitcoin. Then you could start spending Bitcoin. So you basically just have to switch it, and you could switch it when you have your own company. Then you could switch it tomorrow, right? You can denominate everything in Bitcoin and only charge with Bitcoin. The problem is, whether people would accept it, right? But I think some people already are doing it for many years, and you could do it, and that way you could exit the old system, right?
And it's maybe not even about like really exiting the whole the system, at least not directly in one go. It's just becoming aware. And I also don't think everyone necessarily needs to understand how a blockchain works, how a block is being mined, like everything in detail, like how hashing works and encryption and everything. I don't think that everyone needs to understand this. I don't understand how Tesla works. I can still drive one, you know. I don't know how my smartphone works. I can still use it, and I do use it a lot. So I think that's the same with it. The only thing you need to understand is that it works, and from looking at it, that it is now being used by hundreds of millions of people around the world, and it's been here for more than a decade and didn't go away. It had uptime of 99.99999%. Yeah, you know enough already that it works, and then it's really about exactly creating a more honest, as Chris said before, and more fair system. I mean, it's really not your money, and that's what you need to understand. It's really not your money that is on the bank account or on an exchange. It's their money, and it's an IOU, so they owe it to you, but that doesn't mean you get it back ever. So if more than 3% of the population will go to the bank and want to withdraw their money in cash, there's not enough. There's less than 3% in cash that actual money is represented. And that's what you need to understand. And it's an unfair system. Why? Because the closer you are to the power source, to the big banks and to the governments, and to the regulators and to the Fed, or the central banks, the closer you are to them, and usually it means the richer you are, the closer you are to them, then the more safe you can feel. The more poor you are, basically, the less power you are, and the more risk you have. So what happened now with Silicon Valley Bank is, when this started to play out, the rich people, the powerful people, knew. They were the first to know. And so the C-level executives of the banks, they sold the majority of the shares, or the maximum of shares they could sell, they did sell because they knew it's over. So they took millions out, I think collectively more than 10 million. Then Peter Thiel, for example, the billionaire investor and entrepreneur who founded PayPal, amongst others, he could withdraw money before everything collapsed. So this is like he could take all the money that he had on Silicon Valley Bank away because he knew. Bill Ackman and all these billionaires just publicly and probably privately before, so on Saturday and Sunday on the weekend, called for a bailout, basically, or just called for the government to step in, and the government did step in because they are very close to them. And so the Fed basically saved Silicon Valley Bank so that Bill Ackman and his rich friends don't lose their money, right? This is something that others, like normal people, cannot do. So it's really a decision of, do you want to go into a system that is a bit more fair because it's open to everyone and like everything that we discussed and cannot be manipulated? And the second question is how far you want to go. Do you want to go all in, or do you want to just take a more diversified approach and like go in with 1% or 10% or 50%, as we said before? It's really a choice. And if you want to go like the first steps, I believe was kind of your question, or where you wanted to allude to, is it's easy today to buy $10, $50, $100 already. For example, with Relai or with others like Coinbase, it's very easy to buy a little bit, to hold it in your wallet. If it gets more money, you can buy a hardware wallet. You hold the majority on there because it's safer. And then you start playing around, you start learning about it. Maybe you want to buy more. maybe you want to start a savings plan, like $100 every week, just goes into Bitcoin. You get it straight to your wallet. It's also something you can do with services like Relai, for example. Or you say, as you said before, you want to start earning Bitcoin. So there are a lot of jobs out there where you can already earn Bitcoin. If you're a business owner, you can start accepting Bitcoin. A growing number of Bitcoin community people will start paying you in Bitcoin, and then that's how you can also stack sats. So there's a lot of ways how you can get into it, and I think the most important thing is just to get educated and do the first steps and get your hands around the first couple of sats. And then you just learn and move on, and you will start maybe feeling more comfortable with this kind of financial system, maybe not, and then you can stay 50-50, or you can go out of the system. But what I think is very interesting is that the churn rate, which you are familiar with as an entrepreneur, the churn rate of Bitcoin is super low. Like it's historically low. if Bitcoin would be a startup, like it would be one of the most successful, if not this most successful startup, because it has gained a valuation within a decade from 0 to almost $1 trillion. And it has a churn rate that is probably close to 0. So churn rate means that people that start using the service are dropping out again. It's almost like it's very low. People who really started using Bitcoin and understood Bitcoin, they usually don't go back. Like, can you imagine you now having understood Bitcoin and in a couple of years you will just be like, nah, it's not interesting anymore. I focus on something else. No, you'll stay. And so this is also something that makes me feel very positive about the future of Bitcoin, is that it almost can't be stopped. It can't be unsuccessful, because it's just this network effect that just keeps going. Orange pilling is kind of people are telling it to the other people. They're explaining Bitcoin to other people. They get hyped about it. They are interested. They learn about it. They understand it. They buy, and then that's how it goes on and on and on. So this network effect is almost unstoppable.
Absolutely. So I think I would 100% recommend to everybody who never touched Bitcoin or any crypto, and just or maybe is even a skeptic, to just buy $50 of it and just play around, send it around, and just try to learn about the system and just get a feeling for it, and also see the disadvantages, like the bad user interface of hardware wallets and whatever it may be. And I think that's everybody should do, in my opinion, to just have an opinion, because many people, in my opinion, have an opinion on Bitcoin, never used it, never owned it, and I don't think they are entitled to their opinion if they didn't even give it a go to have a look at what it really is. So I think whether you want to invest larger amounts, it doesn't matter. Just buy $50-100 of it and play around with it, buy something with it, send it around between different wallets, and create a software wallet, app-based wallet, whatever. It's super easy. So I think that's certainly for education purposes. And let's maybe switch gears to stable coins. So now we had this big stablecoin crisis. Almost all big stablecoins, major stablecoins, depegged. More than 10%. What is the role of stablecoins? Do we really need them? And do you personally trust any stablecoin? Would you hold larger amounts in stablecoin versus a fiat currency, for example?
Yeah, very important discussion that is now also popping up, I think, with everything that happened, because as a consequence of Silicon Valley banks and Silvergate and all these other Signature Bank and all these other banks that are now failing, also because Circle was banking with them, they also the stable coins, like Circle is the issuer of one of the most used stable coins, USDC, and it depegged. I think more than 10% at one point. So instead of one USDC being worth $1, which it usually held on to the last couple of years, one USDC was worth, I think, 89 cents. So this decoupling is also a testament to that. Again, there's a central authority, there's a central party, which is a security hold, and which is a counterparty risk. It's a risk, again, that you take. You take their word for granted, that one USDC will always be $1, and they might be in good faith and try to do everything in their hands to make sure that this is the case. But they will never be able to give you 100% guarantee. And therefore, it's basically the same thing as trusting any other counterparty, a bank or an exchange. If you trust an issuer of a stablecoin, then you might find them, you should analyze them, and you might find them more or less trustworthy. USDC, you might find trustworthy. Binance, they also have an USD stablecoin. You might find less trustworthy because they're less regulated, because they have a reputation of being a bit reckless and shady, and it's hard, like in transparency as well, a lot. And there's others like Tether, which is quite successful on the market as well, but it also depegged, interestingly, in the other direction. So it went up, which is also not the idea, right? So the idea of stablecoin is to be not volatile, and it was very volatile. It went up like 10% or more. So yeah, in the end, it's a trust game. Whether you trust a bank to hold your savings and not, fuck up with them, you trust an exchange to hold actually the assets that you think they hold for you, and do they hold them safe? And an issuer of a stablecoin, do they actually manage to really keep it stable? They usually do until they don't.
So do we need stablecoins in your opinion?
I think stablecoins are actually a good thing. Yes, it's a gateway. So two things. One is for trading, where it can be handy for kind of trading short term, because it's easier to trade from one asset to the other if one asset is not kind of a real world fiat currency, but a blockchain based fiat currency. You can also trade it via decentralized exchanges 24/7. You can transact with it 24/7. So unlike me now sending a US dollar to Senegal, it's something that's probably kind of inconceivable, like it's almost impossible. Me sending a USDC to Senegal, this is very easy. So for that, I think it makes sense. It's also a stepping stone, I think, to Bitcoin, because what still keeps people, especially in emerging countries where they really have a need for it, from using Bitcoin is the volatility. And they don't have access to the banking system. So the only thing they have is a little bit of cash that is in their local currency, and this is deflating. So every week it has less value, and over a year it's basically dead. You cannot use it anymore. Maybe to make a fire, but not to actually buy stuff. And so this gives them access almost like to the banking system and to the US dollar, which is a rather stable currency. Like, to compare to their local currency, it's super stable. And so that's good, I think. If you don't have access to the banking system, which is billions of people, I think 2 to 4 billion, so 25 to 50% of people in the world don't have access to the transitional financial system, which is a real problem. And you can't really save, you can't really transact, financially, then you're not part of the economy, which is very bad. And if you are not in this system, but you're still afraid of the volatility of Bitcoin, which is understandable because you maybe don't really understand it yet. And maybe you need it short term, which is actually, for Bitcoin, is now not a good solution for if you want to have short term stability, as we said before when we compared Bitcoin to fiat currencies. Then this might be a very good middle way for you to use something like USDC. It's not 100% safe, but it's still it's more stable than Bitcoin, and it's safer than the fiat, and more accessible than the fiat banking system. So therefore, I think it's a good thing. I think ultimately, really, to hold your value on the long term, it's going to be Bitcoin. To maybe transact short term, it might be stablecoins. And then in the end, I think the master plan should be, or the best solution would be, to have stablecoins on the Bitcoin network. Because with something like the USDC, you don't only have a counterparty risk, you also have a blockchain risk. Because as of my knowledge, it runs on Ethereum and maybe some other chains, which every day can collapse as well, which are also kind of centrally controlled. And so there you have these two risks, which you don't have with Bitcoin. With Bitcoin, you don't have a counterparty risk. You don't have blockchain risk because it's the most secure, with the highest track record, with the biggest network effect. It's the most global, most decentralized, with most hash rate. So it's the most secure blockchain you can think of by far, like by orders of magnitude. And so having a stablecoin on Bitcoin, I think, would be, in my opinion, then the ideal world, because then you can imagine you have a wallet, you can download it, everyone can access it if you have a smartphone and access to internet, and then you have like a savings account and a checking account. The savings account would be Bitcoin because it goes up long term, but it's short term volatile, and the checking account is in US dollar or any other fiat currency based on the Bitcoin blockchain. So there's no counterparty risk, and there's no one can block it. You don't have the whole risk with the banking system, but you have the stability. So it's short term stable. Long term, it's still going to be deflationary, but at least short term, you can buy your food and your coffee with it and everything. So in my opinion, I see the world where there's the base chain Bitcoin, and all the other altcoins will go away in the next 10, 15 years, 20 years, and will be basically irrelevant. And then you have the second layer, which is Lightning, which basically scales Bitcoin, which makes transactions way faster and way cheaper. So orders of magnitude better and more efficient than anything that we know in terms of other cryptocurrencies, and also in terms of other payment networks like PayPal, Swift, like the whole banking system. And on top of this, then you have stablecoins. So that's kind of, I think, how fintech and financial services will evolve in the next 5 to 10 years.
So what chain is DAI based on? Is it based on Ethereum? Does it run on Ethereum?
Good question. I don't know. I would assume so, yes.
So how could a stablecoin based on Bitcoin be created? How would that work?
So yes, DAI is based on Ethereum blockchain. I just Googled it. So there is already, for example, there's a project called Taro, which also some Swiss people, Oliver Goker, someone you should maybe talk to if you want. He's one of the best Bitcoin and Lightning developers in the world, and he's Swiss. He's from Bern. He works for Lightning Labs, and Lightning Labs, one of the biggest players in Bitcoin and Lightning. And they developed at least the concept. I don't know if it's I think it's in beta, where you have exactly this. You have a stable coin on top of Lightning, which is secured by Bitcoin. Or there are other projects, like, for example, Block, how are they called? Block something. Sorry, Blockstack. Blockstack is also a kind of second layer technology that makes smart contracts and initial coin offerings, for example, and tokenization and stable coins, and DeFi and NFTs, and basically everything from crypto land. They make this possible on Bitcoin. So if something really works from all these use cases, and a lot of them don't, like a lot of these utility coins, ICOs, they never worked. NFTs, like Instagram just went back from their NFT announcement. They will not launch NFTs now. So it's all up and down. But those things that work, DeFi, NFT, stablecoin, tokenization, smart contracts, and all that kind of stuff that is promising, it will also work on the Bitcoin blockchain. So why on earth would you use another blockchain? Doesn't matter whether it's Ethereum or Tezos or Ripple or Cardano or like. There's so many strange chains out there. Why on earth would you use something like that is more centralized? It can be controlled by a foundation, a company, a team that you need to trust. It's way less stable. Like Solana is going down every week. It's manipulatable, controllable also from the outside. Like Solana basically is controlled by and owned by VCs. 30 or 40% of the coins are owned by VCs. Way less secure, because they have other consensus mechanisms. They don't have proof of work, and they certainly, if they have proof of work, they certainly don't have the hash rate that is required to really be safe. Bitcoin has all that. Why on earth would you use for your whatever project it is another chain than Bitcoin? It's almost like putting a website on an alternative internet protocol that no one uses, and that is inferior to the internet. Why on earth would you do that? No,
I think that's why, in my opinion, I disagree with you that I think people should understand, not in detail, but should understand the concept of what Bitcoin is built on. Because, for example, I mean, I knew it somehow that DAI was based on Ethereum, but it wasn't like top of mind. And if I really think about it, like philosophically, if we get to a global currency or something like a global asset system like Bitcoin, what do we want to base the world economy on? Do we want to base it on the Binance Smart Chain? Do we want to base it on whatever else chain? Or do we want to base it on Bitcoin? And for me, the answer is clear. We want to base it on Bitcoin. So then the question is, are stablecoins, for example, like USDC and DAI, are they doomed because they are building on an alternative chain? And why doesn't a Bitcoin-based stablecoin exist yet? Because one of the criticisms towards Bitcoin is that it moves really slowly, right? I mean, we don't have smart contracts yet, blah, blah, blah. We don't have stablecoins yet. So why, if somebody's excited about crypto, excited about blockchain, excited about stablecoins and DeFi and smart contracts and stuff, they look at Solana, they look at Ethereum, thriving ecosystems, thousands of developers, thousands of projects, billions of VC money, whatever, and then they compare it with Bitcoin, and it feels like a grandpa, like an old person, right? Really slow, really chubby. So why will that happen on Bitcoin, in your opinion? And why does it move so slowly? Why don't we have a stablecoin or a smart contract solution yet?
Yeah. So why it will all eventually merge onto Bitcoin is clear. It's basically what I said before, is because it's the most stable, the most secure, with the most hash rate, the one that has the biggest network effect, that and mainly the security and the decentralization, because these are things that you cannot really build. You cannot be better at this than Bitcoin, because Bitcoin has just moved so fast. You can be a bit more efficient on the main chain, but you then will do this at the expense of decentralization. So you can be faster, but then you're more centralized, and then again you're not very secure anymore. You have counterparty risk again, and that's all everything. So Bitcoin is a bit slower, but it is necessary to be that secure and that trusted. Like you can trust Bitcoin so much because you don't have to trust it, because it's really decentralized. And there you need to make a couple of compromises. So I think this is why, because it's really the most trusted, the most secure chain. That's why eventually everything will gravitate, all the activity will gravitate towards this chain. I believe that it's a winner takes it all, or at least a few takes it all game. Because we have one internet now. We had competing protocols in the 80s, I believe, but now we have one internet because it just makes sense to have one base protocol. Then you can have different use cases, different companies, like whole ecosystems and economies built around it or on top of it. But the base chain, it's a protocol. In the end, it's an open source software protocol, and there's always one or very few that are used because of the network effects.
And my question was more like not the speed of the network, but like the speed of innovation and the speed of projects and the number of developers. It still feels slow. How can we build something like a thriving ecosystem on it? Like let's think big, the world economy. Let's base it on Bitcoin. Let's build stable coins, NFTs, whatever. The decentralized finance, loans, vaults, everything we have on other chains. We want to build it on Bitcoin. How can that happen if the development moves so slowly, and how could we accelerate it, or is it even needed that we accelerate it? So I have this conflict in my head because I see all these other projects they move so fast, like a startup. They try new things, innovate really fast, new concepts, new decentralized finance possibilities. And Bitcoin really feels like the same it was 4 years ago. I mean, maybe there were some changes, I don't know, like Taproot and stuff like that. But really, on the surface, it looks really the same as 4 years ago. So why are you certain that this will change?
I mean, I'm not certain, but I hope so. I think the reason why this is not the case now. So one is it's also a feature. It's not only a bug. It's also a feature. So it's good sometimes, especially if you work on the on-chain. That is the base layer of a future financial system. So it's very important that you get things right here. So it's fine to take more time. So that's why, unlike Solana that has like weekly updates, Bitcoin has biannual updates. So there's an update every, like a new release, if you will, every half a year, every 6 months. That's not a lot. That's not a lot of speed. And mostly there are not many changes in these updates. So this is why on chain you should be very diligent, cautious, and very you should do changes in a democratized way. So this is fine to be a bit slow. Then I agree with you that I also have this problem with us as a Bitcoin community being a bit slow on the other layers. So Lightning and stablecoins and all these kind of applications, they should develop a bit faster, in my opinion. So I totally agree there with you. I think in the end, the final tech stack of this financial base layer will have several layers. So 5 to 7 layers is what I've been told by smart engineers, which I'm not one of them, but they say it's going to be like the internet. The internet also has 7 layers. One basic protocol that is very stupid, very dumb, very solid though, and very simple. And then the others are the other layers are way more flexible, but also a bit more risk and more scalable and efficient, and they can do way more things, right? So I think the end will be that. And now it's your question is how can we get there a bit faster, and why are others like the Ethereum community, why are they so fast? I think it's just funding. They have orders of magnitudes more funding, which Bitcoin doesn't have. Bitcoin is basically a community project from the beginning. There's no company, there have been no VCs, there's no big, money giver, no sugar daddy behind. There has been no ICOs, and so on Ethereum you have these massive ICOs, because they were a bit faster at the beginning, because they also had venture funding from the beginning. So there were already venture funds that poured in money into these ecosystems, and they raised more money and poured in more money. For example, A16Z, so Andreessen Horowitz, they have raised 2 crypto focused funds, and they're both, one is I think 1 billion and the other is 4 billion. So one of the biggest venture capital companies in the world has raised 5 billion and poured it mainly into the Ethereum ecosystem, also some other chains. And there are many VCs like this. So there must be something along like dozens of billions have been invested into these other chains, mainly Ethereum, in the last 5-7 years. That's why they move so fucking fast. And then on top of that, you have ICOs where not VCs, but retail investors invested, also billions in total. So you have Tesos, for example, they raised, I think, 250 million or something along these lines in 2017. And then the bull run came and basically 10x'd, or maybe more, probably 10x'd this, because they held mostly the Bitcoin and the Ethereum that they collected, and then it 10x'd. So they all of a sudden were worth 2 to 3 billion. And I believe I heard a presentation from them. I believe they still now, without really making any improvements to my knowledge, they still hold around 1.5 or 2 billion. So they can keep on. They can keep on forever. This is more funding than even huge fintech startups like Revolut have. And so that's why they can employ hundreds of people. They can run they can give out loans to developer teams that are building stuff. Whether it makes sense or not doesn't even matter, but they just build startups and use cases and technology on their chains. But it's all flawed from the beginning, in my opinion. The chains themselves don't make sense, but they have so much money from VCs and private investors that they can keep on building at a very fast rate on top of it. Like Solana, for example, it's just it doesn't work. It doesn't work for years, but still going strong. They have a strong community because they have billions of investor money. And Bitcoin didn't have that, and still doesn't have it. But there's an interesting development now going on. The last couple of years, a lot of Bitcoin-only funds have been raised and are now deploying money in the same way. Never the same magnitudes. So there we talk millions and not billions. But at least this is coming, and this is going to accelerate the development of second layer solutions on Bitcoin a lot in the next couple of years. We at Relai just raised a 4.5 million round. It has been announced last week with some of the great Bitcoin only funds out there, like EcoDev Capital and Time Chain Ventures and others. So this is, I think, making a big difference now, where we see more accelerated growth and development on the Bitcoin blockchain as well in the next couple of years. I hope, at least.
So do you think could you build a second layer or a Bitcoin type application based on the Bitcoin network, like in a sustainable way, so that you could fund it and then it could generate some I don't know, commissions or fees, and then pay back this investment, or generate profits for the team? Do you think this is possible? And if this would be possible, then probably more money would flow into it. Or why don't you think that more money is flowing into these solutions on Bitcoin?
Mainly from VCs. So VCs fund companies that build technology and the business model around it, where the business itself can be worth millions, hundreds of millions, or billions at one point. So the classic VC model is more prevalent at this point. For example, Blockstream is, from my knowledge, the biggest Bitcoin only company, and they raised hundreds of millions, I think, at this point. And Lightning Labs as well, that we talked about before, they raised from great investors, not only Bitcoin only funds also, but also others. They raised also like tens of millions, if not hundreds of millions, and they make they are profit-oriented companies that just only build on Bitcoin, on Lightning, and for example, these are the guys that are building the stablecoin on Bitcoin, the Taro. And they will make money with transaction fees, maybe, or I don't know how, but they will make money, and so that's how they basically pay back. They will get a good valuation, and then VCs will sell their shares, and the kind of the normal thing. And there can also be, I think, through, for example, Blockstack and others, there can be already now token generating events, so ICOs, utility tokens on Bitcoin. There can be NFT marketplace on Bitcoin. You can basically already do a lot with the second layer solution that we have now on hand, like Lightning, Liquid, RGB, and others. It's not really used that much. It's not the frenzy, the hype never came on these Bitcoin things. Altcoins were just way faster and way more aggressive on that. So if you think about ICOs, you think about Ethereum. If you think about NFTs, you think about Ethereum and all these others, because they were just faster on these hypes. But these hypes were up and down. So do you hear of any interesting ICO lately? Do you hear of any interesting NFT marketplace lately? OpenSea, the biggest NFT marketplace, that has lost 90% of their volume in the last year. So these are all boom and bust cycles. Maybe some interesting things will evolve, and then eventually I think it's going to be built on Bitcoin. But that's kind of unique to the Bitcoin community as well, that hypes are not valued that much. It's really more a long-term sustainable development effort that is being done by mainly also open source commitments from individuals, developers that are not hugely funded yet. But I think, as I said before, the more funding will come in, mainly through VC, but maybe also some from retail investors that are funding projects, or companies like us, for example. Once we become profitable, of course, we will donate some money to Bitcoin Core developers, Lightning developers that are building these very important open source technologies to make the Bitcoin network more valuable. And so I think this will be part of the ecosystem. It's just developing way a bit slower and more sustainably than on other chains.
And how do you think about other chains that are piggybacking on Bitcoin by just anchoring their chain to Bitcoin and thereby still profit from Bitcoin's security and immutability, but still have their own chain? Do you see any value in that?
Could be potentially. I don't know. Then it comes down to, again, how decentralized and open source this chain is. Because if, for example, on Ethereum you have things like wrapped Bitcoin, then you still need to trust your Bitcoin fully to Ethereum. Because if this smart contract on Ethereum that holds the Bitcoin on your behalf, kind of, I think that's how it works roughly. Like wrapped Bitcoin is basically Bitcoin on Ethereum. Then you need to trust Ethereum. If Ethereum goes past, or if there's something wrong with the smart contracts, your Bitcoin will be lost as well. And same with side chains that use Bitcoin as a settlement layer or security layer. You still then have this counterparty risk to this blockchain, in my opinion. But there I might also not be the expert, because I'm not a tech guy at all, and I also don't spend too much time on these other chains. There might be a lot of innovation that can work onto Bitcoin, but I'm just very sure about is that Bitcoin will be the base layer, that everything else is being built upon, and then the rest is really up to the free market, who builds what use cases, which use cases are catching on sustainably, what is being funded.
So you personally don't hold any other cryptos other than Bitcoin? Are you Bitcoin only?
Pretty much, yeah. So yeah, pretty much. I still have some relics from the old days. So obviously, I had my fun with altcoins in 2017, and I only learned. I'm not a fast learner. I only learned 1-2 years later, after this whole craze in 2017, all of that. But since then, I pushed away, sold most of my altcoin holdings, and mainly I'm into Bitcoin. Like easily plus 90% of my crypto exposure is Bitcoin, probably 95%. There's a couple of maybe like dust around, but nothing that I really believe in at this time.
So Relai is Bitcoin only. So why did you choose to go Bitcoin only? Because I assume because of these reasons. Why? Because you believe so much in it. Do you feel a lot of pressure from investors or customers to add other coins to your service?
Yeah, some investors definitely ask for this, or kind of try to push ourselves push us into this direction. And also some users actually. We have done a survey with our active user base, the people that actually use the Relai app, and then within a couple of days we had I think 2,500 responses. And actually, when we asked the question, would you trade other things than Bitcoin? Would you buy something else than Bitcoin? For example, ETH. 45% I think said yes. So almost half of the people would also use us for ETH. That also made me think. And yes, the pressure from some investors is there. Most of the investors that we have now in the cap table are really fine with this. So they're either Bitcoin only funds, or funds that kind of share our view of the world, that it's going to be Bitcoin only mainly in the next 10 to 20 years. But there are a lot of funds that I talked to while we are fundraising, crypto VCs and fintech VCs that are really into other chains as well, and see the world becoming a multi-chain, future. And with them, it's harder to argue, obviously, and they usually try to push you. We even had some offers where they said, yes, we're going to lead the round, which means 1 or 2 million, maybe more in the future, but we want you to add Ethereum. And so these were the hard conversations. And I mean, it makes sense from a business, from pure top line business perspective, that they haven't spent all these years in the question why Bitcoin and not crypto. They haven't studied these tens of thousands of hours that our team did, and so they just think, hey, they are very good at selling this one coin. There are 20,000 other coins. Why the hell don't you sell all these other coins? You're going to make so much more money. And they're kind of right from a business perspective, but they also then leave out there's a lot of cost and effort as well to add all these other coins. They usually tend to forget that. They think it's just one click to add a new coin, and to maintain it, I mean, it usually takes like a team or at least 1 or 2 developers to do that and maintain it. And then they don't really have to share their vision, the sustainable vision, long-term vision with us. Why would we add coins that are now in the top 10 just to get some trading volume from them, and then in a year or 2 from now they collapse, or they like irrelevant, and then they just cost us money and don't give us any revenue anymore. So it's a constant battle of getting the newest coins on, and in the end you also lose trust of the people, because you just basically, that people will understand sooner or later that Coinbase, and mainly also Bitpanda, and mainly also Binance and all these shitcoin casinos, how we call them in French, they just launch or list anything, like any shit that you can trade, they will list, and they will dump it at you as the retail investor, and you will lose your money. Most of people lose their money. Most of the people that invested in Shiba Inu or Dogecoin or Solana or any other of these very manipulated or like strange irrelevant coins, they've lost money. And so we don't want to be that. We don't want to be a speculation platform. We want to be a savings platform. We want to give the billions of people that will want to have access to a safe, stable store of value, very easy access to it, very frictionless access to this. We don't really care about trading, because there are other exchanges that are way better. Like these so-called shitcoin casinos are way better. If you want to take the risk and speculate with the latest coin, that's not our business. Our business is to educate people about Bitcoin and to get them onboarded to Bitcoin very, very easily, and to help them set up a savings plan and to help them store their Bitcoin safely, so that in troubled times they are fine and can sleep well. And this is just another business, and some VCs understand, many VCs don't.
Yeah, so Yassir, we had some questions regarding your service. Maybe now is a good time. So Yassir asked one question. Are these BTC wallets stored or hosted in Relai platform? Please clarify this point. Yeah, so the question is, how do you, from a philosophical perspective also, how do you onboard people? I haven't used, for full transparency, I haven't used your service just yet. So I think from what I understood is that for first-time users, you create a hosted or you create a wallet in the app. So I assume that you require people to write down their 12 or 24 words. And how do you think about then transitioning from this system to a more secure and completely self-custody solution? So how do you onboard? What's the easiest solution? And maybe also describe what your current service looks like.
Yeah, so usually it's you download the Bitcoin app, and when you launch it, it takes a couple of seconds, and it installs a Bitcoin wallet on your phone. So it's really your self-hosted Bitcoin wallet. We never have access to this wallet. You have access to the private key, being the 12 seed words. So you, as you said, Remo, you write them down and you store them somewhere safe. So if we go bankrupt, if we get hacked, if you lose your phone, if whatever happens, you still have your 12 words. You can download the Relai app again on another device or any other Bitcoin app, and you can initialize, you can restore your funds again on there. So it's absolutely self-hosted. It's not a hosted wallet. It's not a custodial service. It's non-custodial from the beginning. And then you are able to buy and set up a savings plan. It will always go directly to this wallet. At one point, when you have more than, I think it's $500, there's a push notification asking you, hey, have you, so first of all, you can do one trade very easily within 1 minute, and then the time you do the second trade, you get basically pushed to write down your seed words. So you really no one loses them. That's also very important for us. And then once you have, I think it's more than $500 worth of Bitcoin, you will get also notified, hey, it would be a good idea to buy a Bitcoin hardware wallet. Here's our suggestion and here's our discount. So you get, I think, 5% discount on a Bitbox, which is a Swiss-made product, hardware wallet, open source as well, one of the most secure hardware wallets, I believe, out there, and also a Bitcoin-only one. So you can buy this in the app very easily. The next day you get it to your post box, and then we have blog and everything materials to explain you how to kind of set it up and how to send your Bitcoin to this wallet. And then last but not least, the user can also, once he has a hardware wallet, he can also set up a savings plan directly to this external wallet. That is also possible. Right now, it's maybe not as user-friendly yet, this part of the app. It will become way more user-friendly in the next couple of months. But that's basically the journey from I have no idea about Bitcoin, I might heard of it, and I want to start with 10 or 20 bucks. You can download the app within a couple of minutes. You can buy, you can get your Bitcoin, you can store them safely with your 12 words, and you can start stacking sats, as we call it. So set up a savings plan and accumulate more Bitcoin, and then send them on a hardware wallet or save them, store them a bit more safe. And last but not least, you can just set up the savings plan as well directly to the wallet. That's usually how the journey goes.
So are you able to buy, when you download the app, are you able to buy instantly with like Apple Pay, Samsung Pay, or does it require a bank account transfer?
No, you can do both. So either bank transfer, this usually takes 1 day to clear. So then you only get your Bitcoin a day later. You can also directly buy, let's say, $100 with credit card or Apple Pay or Google Pay, and then it will clear pretty much instantly. You get exactly the price that you have right now. And within a couple of hours, you have the final transaction on your wallet. It's the fastest way you can do it. You can even do it on the weekend, like it's 24/7 instant purchase directly into your non-custodial wallet already from the
send the money through the bank account, then you exchange it whenever the money hits your account, I would assume.
Exactly. So it can be the same day, depending on what bank you use. If you put in a transfer in the morning, like let's say 8 o'clock, then usually it clears the same day. If it's in the evening, then maybe next day.
Or you can do, some banks allow express transactions for a couple of bucks fees, and then it's instant, right?
Exactly.
Okay. So Fabio here asks something a little bit more detailed. I think it's a feature request. When reflink without a code, but just the link others can click and sign up, please. Love the app. Greetings from the Netherlands.
Thanks, Fabio. Yeah, that's a good question. So we do have a way to get a link, but that requires you to get in touch with our team. We will give you actually a individual code. So Remo, if you now start using the app, you will get a ref code, which is rel 12345 or something, and then you can share this code with your friends, and whoever starts using the Relai app and buys Bitcoin with it, you get some commission back, 0.5% of everything they invest. So that's the ref link Fabio is referring to. And then Fabio, you can get in touch with the team and ask for an individual code, so we can change it to, for example, Fabio, or for you, Remo or Uherek or whatever, and then you can share this. And also what we can do is a web site that is then a link with the code on it, and you can send it. So that's not ideal yet. I know what you want, Fabio, is just a link that you can share with people. With this link, they can download the app, and the code is already basically placed in the app, and you already start then earning your ref payments. That's unfortunately technically not yet possible. We're working on it. But right now, what needs to happen is you need to send the code, which you can do from within the app via WhatsApp, via Telegram, email, whatever, however you want to send it. You can share the code, but you need to share the code, and the person who starts using the app needs to put in the code either at the beginning of the onboarding process or when he or she buys, so closes or finalizes the purchasing process. The person needs to put in the code, and then it's done. Just one time, put in the code one time, and then this person gets 0.5% less transaction fees, and you, as kind of the ambassador or the referrer, you get 0.5% back on whatever this person spends on Bitcoin.
And then Fabio also said, Relai is my go-to for BTC DCA. So he seems to be a happy user.
Thank you.
Then Bitcoin Jingles asks, what's your recommendation for DCA in the US? Maybe also in what countries are you already active? And if not in the US, what would you recommend? Are there similar services in the US?
Yeah, definitely. There are actually similar service on all continents, which is very interesting. We are basically the leading one in Europe, but we're only available in Europe. So in 40 countries in Europe, our biggest markets are Germany, Switzerland, and Austria. Then also Italy is big, and France, and Spain, and then there's a long tail of all the other European countries. For the US, it's definitely Swan. So they're called Swan Bitcoin. Very similar service. You can very easily onboard and start buying Bitcoin and do DCA, so savings plan. The only difference is, and that's probably due to regulatory things, it's full KYC and it's custodial. But other than that, they're great people running the show there. Corey Clipstein, for example, and this team, great Bitcoiners that are doing an amazing job.
So what are customers required to do KYC with you, or do you have a certain limit that KYC is not required? How does that work?
Yeah, so because of Swiss laws, up to 1K per day and 100K per year, you don't actually need to do KYC at all. Wow. That's pretty cool. Yeah. So you can basically really just download the app, and you don't even have to give us your name or your email address or whatever, upload any documents, nothing. You can just start with small amounts. And then if you want to go higher than 1K per day, you can do a quick minutes, and then you're good to go, like unlimited, basically.
And what's your policy regarding data collection? What kinds of data do you collect? And how do you think about data collection?
We do kind of collect the data that we just get from the bank wire or the credit card payment. So there's usually the name, the address, the bank account, and the country, stuff like that, just the basic information. And obviously, if someone does KYC, then it's the proof of address, it's the ID, and all the documents that we need to collect. We are required to hold this for 10 years by the Swiss regulator, but obviously we are not giving them away. If someone asks us for the data, we don't give anyone the data, with one exception, is if some regulatory body or the police has a suspicion of some person that he or she is doing tax evasion or money laundering or criminal activities. Then at one point we might, if the court really orders us to give away the data, then we do. But we never experienced this in the last 3 years that we are live.
Yeah, and then there is this little bit ironic view of startups in the Bitcoin or crypto ecosystem, that in a lot of cases, it would have actually been more profitable to invest the money that maybe investors invested in companies to invest that directly into Bitcoin, and it would have been much more profitable than investing in the company itself. So how did you pitch your venture investors? Yeah, what's your pitch and what's your plan for your company? Because you only take like maybe on average 1%, 1.5% in fees. So you need to have a really huge volume, right, to make meaningful revenue. Do you have other revenue streams as an idea for the future, or do you just plan to get the volume as high as possible and then to base your company on that?
Mm-hmm. Yeah, we did get this a lot from investors that they said, "Look, interesting company. I would love to support you, but whether I put 100K or whatever amount here in your company, and if I, as opposed to putting it in Bitcoin, I believe in the next 10 years I will make a better return." I understand this at one point, or like from one hand, but on the other hand, Bitcoin has done a big deal of growth already in the last 10 years, coming from 10 cents to 20K. Yes, it will go maybe to 100K, maybe to even 500K, maybe 1 million. We don't really know, but we could also because we are still starting. We're not 10 years old. We're only starting. We're an early stage company. You basically, at this point, you made a seed investment. So from this 20 million valuation that we now have after this round, we could go up ideally, if everything goes well, to a 1 billion valuation, which would be a huge multiple that you may or may not get with Bitcoin, but might as well, as you said at the beginning, don't put everything into one basket. And sometimes over a certain period of a couple of years, maybe it can be better to invest in the shovel than into gold itself, right? So when the gold rush happened in the 20s, yes, you could buy gold, and until now, in these 100 years, you would have done a massive return. But also, you could have invested in shovel companies or jeans companies at this time, like whatever company, mining companies, obviously, gold mining companies that did very well in like a short time frame, maybe 5 years, and then you'd maybe have done a better deal. So that's kind of the argument on why it might be interesting also to invest in Bitcoin companies. And another as well is that as an angel investor, for example, you might sit on 1,000 Bitcoin because you have been very early, and you obviously want this, or maybe 100 Bitcoin, more realistically, and then you want obviously the value of this Bitcoin go up. So might be a good idea to take 10 Bitcoin out of these 100 and invest it into the ecosystem that brings more people in, that make the network more valuable. So in the end, you'll profit both. If you pick the right startup, then you profit because their value goes up, and they help to bring more value into Bitcoin, which then the Bitcoin price is also going up. That these would be maybe two arguments.
So how much did you raise in total so far?
In total is about 7 million in a pre-seed round, and a seed round, and then a seed extension round.
Got it. And why did you choose the venture capital route instead of just bootstrapping your company and have complete freedom?
Yeah, good question. I think with this company, this sort of company, it's very important to be super fast, and it's quite expensive to build what we have built now. The technology, the licensing, the team that is needed around to further improve it and market it and everything, the whole community building, it's a lot of work, I can tell you, and it's super fun, but it's a lot of costs that occur. And so I don't think I wouldn't have had the money to pull this all off. And if we had just started bootstrapping, I don't think we would be as close as where we are at now. And probably we would be dead by now, because you can be sure if you have a good idea, especially in like a fintech B2C case in an early growing market like Bitcoin, you can be sure if you have a good idea that someone else will do a similar thing, and this person will raise a lot of money, and then he or she will be faster and basically kill you. So you need to be competitive. You need to be fast. It's not like opening a restaurant where you have rather low fixed cost and like you can enter pretty quickly with a couple of K. This you need to build it big, and you will lose a lot of money in the first 5 years. But then, if it's really big, as you said, we need massive volumes. We have had more than 100 million in volumes, trading volumes, since we started 2.5 years ago, which is kind of impressive number, but it's still nothing. This is what Coinbase basically does probably in an hour or maybe half a day or whatever.
Yeah, but still, it's 100 million. I mean, that's not nothing. But if you then take 1% or 1.5%, then you had like lifetime revenues of 1 million or 1.5 million max, right? So
Yep.
it's still for a huge team with a huge capital raise. It's really not that much revenue,
Exactly.
right?
Still burning money, that's
Yeah.
for sure. And so we need to still grow, I would say 3x from now to be to make it to break even, to make it profitable, and then grow a bit more still and like continuously to basically, in theory, be able to pay back the investment. But that's how it goes with the startup. You know this better than me. At the beginning, you need to invest and burn money, and then build something that can really grow 10x to 10x of the revenue that you have actually used to build the company. And I believe that we can still like we are now making this year would probably make 50, 60, 70 million, or probably more, 70, 80 million, something like that, this year. And I believe we can 5 to 10x that in the next couple of years, and then we would be profitable.
In volume, you mean?
Yeah,
volume. And the fee structure, or let's talk about the use case. So what's the USP of your service, and why should people use it instead of using Kraken or Coinbase or whatever other service? So what's special about Relai? Is it cheaper in fees? Is it what's the USP? How do you acquire users?
So it's the only place basically where users can for like really quickly, within 1 minute of downloading an app and onboarding, and 24/7 buy Bitcoin instantly to their own non-custodial wallet. This is something that doesn't exist anywhere else in the world, and this is also something that really clicks with people. Like, oh, I don't need to go through an extensive registration, verification, onboarding process. I don't have to wire money, wait until it's there, exchange it, and then hold it there with a counterparty risk, and create a wallet and withdraw it to there. And so I don't have this whole complicated process. I really can, from $10 already within 1 minute and a couple of clicks, be onboarded onto Bitcoin, set up a savings plan that comes right into my own custody. And I can do that 24/7 with my payment method of choice. I can even do it, Saturday evening or whatever, when the banking system is closed. And then I think we just did a good job in having a good branding, a great community that's very helpful and very encouraging. And a great team that is just, it's not rocket science that we are doing, but we found a good niche, and we were first on this, and we were fast on this, and we're still fast. This is really like our priorities are simplicity, speed, community focus. And so I think that these are kind of success factors or USPs to others that were crucial to the still modest success. I mean, we were still really at the beginning, and I think what got us here in terms of principles and values and USPs will also get us much further. But obviously, we're also improving on the product, improving on the vision and everything, and maybe Relai will be also a bit of a different company with maybe other revenue sources as well in the next couple of years. You know how it goes. Sometimes you pivot. It's a constant struggle, but it's really fun, and I believe we have the ingredients like very good team, great ambitions, great vision, a deep link to the Bitcoin community and everything that we need to make this thing way more successful than it is now.
Yeah, I think it's great that companies like your company exists, and that entrepreneurs really like, also it's almost like a missionary role as well, right? So you chose to not take on all these altcoins just to increase your volume, but you really want to take like the thing that really, from your perspective and mine as well, really has the substance and the longevity, and you try to onboard people on it with a good solution. I think that's really a great service to the ecosystem. I'm not sure that I would want to do that, because it seems really hard with such a low fee structure and revenue structure. As we talked about, you would need tons of volume. 100 million is already a lot, but it's nothing for a company like yours to really be successful. You would probably need, I don't know, 1 billion in volume per year or something to really make it really work as a company. So it's really a hard problem, but I think it's fantastic that entrepreneurs like you exist. So thank you for your service. It also hopefully also helps my own investment in Bitcoin. So I think that's a good point to wrap up. I think we could still talk for many hours. Hopefully we will do a round 2 at one point, maybe 2 more comments from the community. Hannes also said about his own experiences. I tried to orange pill my friend, but he keeps saying we are too late. I bet he will jump in at the all-time high. Damn, I wish he would understand. So I think these are the struggles that we all have. People think we are too late, and yeah, things like that, and all the emotions. And then Chris also said, yeah, thank you, Julian and Remo. I'm still a BTC trainee, and your views reinforce my own faith and conviction. Definitely signing up with Relai ASAP for future DCA. And yes, for me, is freedom money. So yeah, thank you all for watching. It has been a fantastic live stream. A lot of comments, a lot of questions from you. That's how I like it best. And yeah, thank you, Julian, for coming on. Yeah, where can people find you? Where are you most active? I assume on Twitter, and where else can people find information about you?
Yeah, thank you very much for having me. It's really nice, an uncommon format, but a very, very nice format where you can really do some deep dives and some philosophical, ways that you can take, and discussions you can have. So thank you a lot for your time and your invitation. Yes, you're right. I'm on social media, mainly on Twitter. At Julian_Liniger, I think, and just on LinkedIn, Julian Liniger. Feel free to text me. Ideally, please no sales pitches. I get a lot of them recently, and I decline all of them. But otherwise, please feel free to let me know. Give me feedback about Relai, how you like it. If you have problems, please get in touch. That's how we can learn and improve. And yeah, we have a website, obviously, relay.app, where you can also find links to our community. We are active with Telegram chats. We have, obviously, as well, a Twitter account and LinkedIn, and everywhere you can follow us. We have a newsletter. So yeah, get in touch. Thank you very much, Remo, for taking the time, and talk to you soon.
Absolutely. I will, of course, also link everything down in the description box, so you can have a look at Julian's Twitter and the other links as well. So all of you, thank you. If you want to see more interviews and live streams like that, please subscribe to this channel. Activate the notifications to not miss any future live streams. And also let us know if you're watching later. Let us know your thoughts in the comments below. Are you orange pilled already? Have you tried to orange pill others? What are your views on altcoins versus Bitcoin and all the other good stuff? That will keep us busy for the next months and years to come. So thank you for watching.